All right, everyone. So this is going to be the topic, mostly just the secrets to safe trading. And I'm not going to solely focus on mostly just like, I don't want to say secrets, quote unquote, because almost everything that comes with safe trading is more so like a self-explanatory. Like you find it as you mess up, you learn from people that have been through it. Half the time you hear what they say and you're like, you blow it off. And then once it finally happens to you, you see the effects of what they used to tell you, and that's when it finally starts to click and everything kind of just starts to roll as a ball, basically. And a lot of the stuff that I'm going to be talking about tonight, it has been talked about heavily in the past Thursday night sessions. So there's maybe a lot of repetition, but thankfully, a few people did post a few questions in the Discord with a lot of like personal, not personal issues, but just personal things they've been going through with trading that's actually going to help me speak on what I've been went through and overcame, and also how I worked through it over, if not a few months to like a year of figuring out how to break that habit or how to break the idea of quote unquote missing on a play and then you want to chase the next one. It all ties back to quote unquote the secrets to safe trading, I want to say. And of course, I know you guys can probably see the first word that's up there, and that's patience. I don't want to speak too heavily on patience like to start off, but I want that to be the main focal point of the whole start of this entire video or class, I would say. I think a lot of people, when they think of patience, it's not more so like I have to sit and wait. I just have to wait. I have to wait. That's the main like vocab term of patience, like with the real world. But what I try and incorporate with the word patience and trading is more so like you're anticipating a move to come to you. It's not like you're just sitting here and you're watching and you're waiting the entire day for something to happen, for something to form. It's more so the idea of you're waiting for something to come to you. It's like an affirmation of a chart setup that you know you've played in the past that works good with risk reward. You know that your hit rate historically on this specific pattern, it gives you the highest rate of return compared to a small loss that may come with it. So I try not to just focus on like, oh, be patient when you trade. Sit there and just wait. A lot of people, they'll sit all day and then say they don't make a trade the entire day. Well, I was patient and I had no positive results. Or say they waited all day, a setup finally came to them, but at the end of that day, they were still red on the day. If people still feel, and this is like me speaking on my experience as well, when I've had a red day, but I followed all my rules, I used to not beat myself up, but more so like, what did I do wrong? Like, what do I have to fix now? Even though I waited, I was patient. The setup that I usually trade that has a high favor of reward compared to risk, it just didn't play out this day. You don't want to think about it as, oh, I'm red or I'm down on the day. Like this was a unsuccessful day. A few people that I've helped in the past, I've like put this into their mindset of if you follow a plan, if you wait for a chart to set up that you know, okay, I could lose on this, but it's the safest entry for me to take. It's the safest trade for me to make at this point in the day. I've waited for 4 hours already. Nothing has aligned that I like, but something is finally setting up that I know my chances of winning are going to be higher than losing. A lot of the time when you enter these, it's not the fact of, oh, I had to sell for 20% loss. If you prepared, okay, if I'm right on this, I can make 50%. Well, if I'm wrong on this, though, then I'm going to be expecting to lose yada, yada percent, 20%, 10%, whatever that would be. I've had to come to terms with myself with the fact of when I play a setup, I'm not focused on the result of success or failure. I'm focused on I've hit this in the past 8 out of 10 times. So I know I'm going to lose 20% of the time when I enter a setup like this. Or with my journaling, if I know, like if you guys know patterns well, just a basic cup and handle or a hold on support trend that's held historically very well. I know off certain patterns, off certain trend setups, off certain alignments from zones, what my percent of probability will be if I enter at this zone based off what I've done in the past with those exact setups. So when it comes to certain things, I wait to go off my historical hit rate on plays. It's not like I'm just patient. I'm waiting to make money on the day. I'm waiting to enter something for today for the first time. I'm just waiting for something that I know historically has a high probability to make me money. That's the patience I use when I have my, if you want to say, secret to the safe trading. I just want to see the same setup that I always see that I like, that I know when I played in the past, it hits 8 out of 10 times, 7 out of 10 times. Because right away, when you enter something like that, you have a 70, say the hit rate is 7 out of 10 that you enter and you are able to sell for 20% gain, 50% gain, I know right away I have a 70% chance of winning on this trade based off my historical patience of waiting for this setup. If I do lose, the only thing I can really focus on is, okay, well, did the setup align 100% how it has in the past when I've entered it? Say that's a check and it's a like, yes, it has aligned the way it did. The volume was all the same. My entry was spot on. It just didn't fulfill the chart setup that it has in the past for that 30% chance of losing like it can. You don't want to beat yourself up over, oh, well, I lost. It's a fail. Setups don't work every time. A trade that you enter that's not a setup and you win on it, you're not going to win those every time. So you can't expect to just wait and then say you miss out on a play and you chase it. You have to focus on the setup is coming to you. You're not just watching and waiting. You're letting this play come to you. You're waiting for your historical hit rate pattern or trend that you like to play or a specific setup you like. You are waiting for it to come to you. Because that way, if it's a win or a lose, the way I look at it, it's a win trade because you waited however many hours throughout the day. It finally hit the way it should and you took action. You executed the way you should. That's the biggest thing that I focus on for myself at this point in my trading career, because then no matter the result, if I size $1,000 and I'm willing to risk 50% of that before I even enter, okay, my risk is $500. Can I live with that? If I'm able to sit here and smile and say, I can lose $500 and not be upset. If I lose that 500, guess what? The trade worked out. I stuck to my plan before even entering. I made sure I followed what I said. If I would enter at 60% loss, 70% loss, I lost more than I was expecting, I have a right to be upset. I have a right to think, okay, this didn't work. But if I go back to the main reasoning, I planned to lose 50% of that position, but I didn't sell when I was supposed to. Whether it was with the chart zone that broke, whether before the trade, I just told myself mentally, if I'm down 50%, no matter where the alignment is on the chart, I'm going to sell because that's what I'm willing to risk for $1,000 position. If I don't want to sell early, this is how I'm trying to incorporate these questions as I talk so that I don't just like this question. So I want to like keep this fluent so you guys are attentive, but got to scroll up a little bit. So I just want to read the main thing people talk about when they ask questions about execution or just rushing a trade, or how do I keep my safety there? How do I avoid like feeling like I missed out on a play? The first thing I want to read is someone said, poor executions have led me to lose confidence. I'll go into a trade, my stop loss hits and then goes my way. It blows me very bad, makes me upset. The question is, how does one get better at executing good entries / exits just more time in the market until you develop that skill? How can we develop this skill? So this kind of goes back on what I was just talking about. You have to figure out what are you as a trader, like what setup, what pattern are you best with? Like, so a lot of people, if I mention like the cup and handle setup, if you guys know what that is, I don't really have to explain it. And if not, I recommend looking up a picture online of like a cup and handle chart setup. A lot of people, when I mention this setup, it's like, well, where do I enter? Do I enter on the top of the cup? And I should try and find a picture while I'm talking about this. You guys able to see my Google screen right here? Okay. I should have had this prepared, but I wasn't expecting to give an example like this. Let's see if I can zoom in on this. I don't know what, okay. Hopefully this is big enough to see, but this cup and handle setup, when I mention this to people, the way I enter is not what a lot of people will teach because they're focused on, they want to wait until the confirmation is there. They want to wait until the setup is fully intact. My risk when I look for a cup and handle, and I assume you guys can see my mouse cursor as well. And if not, let me know real quick. I feel like you guys should see it. You guys see the mouse moving on this picture? Okay, yeah, someone said yeah. Okay. So when I'm looking, like this is all my personal bias. This is one of my favorite patterns. Cup and handle is my bread and butter. This is the main one I focus on, whether it's on the 30-minute, the 2-hour, the 4-hour. If I'm scalping, I'll be on the 2-minute or the 5-minute. But like you guys know, 15-minute and 30-minute is what I love to wait for because it gives you that confirmation on the larger time frame. You're able to size light and hold longer. You're not stuck on a quick 1-minute candle move, a 5-minute candle move, and you're getting scared. What chart have you spotted this on recently? So when I get to the end of this lesson, I'll pull up my charts, or at least I'll find a picture that I've screenshotted, and I'll show you an example of this cup and handle setup on like an actual trade that I've taken, or just a setup that I've seen happen and I missed my entry on. So like for me personally, I'm looking at this bottom of the cup. I'm looking at the main support of this pattern forming. I'm not entering like, I wish I could zoom in on this. I don't know what this will do. Nothing. Oh, here we go. Maybe not. So basically when I am looking at this, I don't want to enter on the first double bottom that hits. I'm not focused on the low candle right here. I'm not focused on the next low candle right here of this bottom of the cup. I'm looking at the momentum, the transfer going up. I'm looking for that curl. I'm looking for the support to make higher lows as it rides up. I want to enter as it forms on the upside. I'm not focused on, okay, a double top where the handle is, it pulled back and made that little falling wedge. This is the proper entry where people talk about. They want to see the double top hit. They want to wait for that pullback and then enter. I don't want to say anticipate the move, but I'm focused on, okay, if I see this pattern forming and we're, say, at the middle of this, where it's starting to slowly make that turn to the upside, I can size light enough to the point where I'm not worried about losing my whole position. If it happens, it happens. I'll add 2 to 3 weeks on it if I'm on the 30-minute, because this is a long-term setup on the 30-minute. If I'm on the 2-minute or the 5-minute, I'm going to watch to see, okay, is the buying pressure increasing, or is the volume at least increasing as this hits the bottom and tries to make its move back up to hit that double top and then form that handle. When people start to buy this position, I want to be trimming or selling out completely, because I already made my chunk of the move. My chunk of the move. A lot of people, and maybe I've just had like the wrong people that have taught me this in the past over the years, they will wait for the quote unquote breakout to happen to size into this position. I want to catch this before the high even hits again with this double top. This is a setup that I have done, and I know right away if I enter when the momentum is building, I see the volume increase, and I'm noticing, okay, this is the pattern that I like to see. I'm noticing the whole outcome forming. I see what could happen if this follows through historically like it has for me in the past. The biggest thing I do, I size light. Depending on the time frame I'm on, 15 or 30-minute, I'll add 2-week expiration time added on. I'll add 3-week expiration. I'm not expecting to make 100% on this, 200%. I'm sizing to the point where, okay, my risk is, let's say, 30% loss. So right away, I know, okay, if I size $1,000, my risk is going to be $300. I'm calculating this before I even enter. As this is forming, I'm figuring out the price of the contract I want. I'm figuring out how many contracts I'll buy. I'm figuring out how many I'll trim if the double top does hit on this pattern. So I calculate all of this because that's my definition of safe trading. If I have this whole plan mapped out before I even think about entering this trade, I know what's going to happen, whether it's up or down, green or red, fail or success. I'm prepared. So at that point, my emotions, like the previous week when I talked about this, my emotions are gone. I'm not stressing over a huge red candle that hits after I enter. I'm not stressing about green, 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 and then thinking, well, I don't want to sell right away. I'm sticking to a plan that I made up before entering. My mindset's made up. The win and loss is already made up. I know what's going to happen either way. So I'm not stressing over candles that come out of nowhere. I'm not stressing over other people saying, oh, this doesn't look good. I'm focused on me. I'm focused on what I have confidence with. I'm focused on what I know from historical probability when I enter this play. How do you handle getting stopped out, but your setup is still valid? Do you re-enter? So I'm going to answer that like very short. I don't want to like length it out because it's a pretty simple explanation for that kind of question. And a lot of people, when they ask it, it's hard to comprehend for their self like examination because they've never tried it before. Size for zero. As hard as that may sound and as bad as that may sound, you're focused on, okay, say you enter a trade that's a $500 position and say your account, let's just say $5,000. So right away, you're sizing 10% of your account. Can you risk losing that whole $500? For me, the answer is no. I can't risk 10% of my account just on one trade. So then I break it down. Okay, well, how much of this 500 am I going to cut off a percent loss? 50%, 40%, 30%? I know you're saying a predetermined risk. Oh, that's a different question. My bad. But yeah, so I'm focused on, okay, out of this 500 that I initially want to size, 500 is my normal sizing. What is my risk on 500? Okay, let's say it's 20%. So you're willing to risk $100 out of that $500 position. Why not just size $100 and let the pattern play out? Let the chart do its thing, because you already told yourself, if I size $500, I'm going to trim at 20% loss. Even if the setup is still valid, I'm going to sell at 20% loss because I can't risk more than $100. Size for $100. Hold that position to zero. Because then at the end of the day, say the pattern, like, it holds, but the premium's getting chopped up. You're down 90% at one point. If you're sized for that $100 loss, you're not going to sell down 90% because you haven't lost the whole 100 that you're expecting to lose. You're going to hold that position all the way to zero. And if the chart pans out, like historically for me, I usually have about a 75% hit rate when these cup and handles form to my liking, to my overall market sentiment, volume. If I use EMAs on that time frame, the historical zones off support or resistance rejects. I'm focused on what has worked for me. So as you work through this and size the way you can, you're looking at your personal trait as a trader and as a person. Can you hold to zero? Can you hold a position that's up 50% and not trim, even though the pattern hasn't played out the way it has? This is when self-accountability comes into play, and knowing what you need for your, I don't want to say your confirmation, or you're like, yes, I did it, but it's all about like, what can you risk, and then take that risk and make it your all in. If you're sizing 500 and your risk is $100, just go all in within $100 position and let this pattern play out. Because right off the bat, for me, 75% chance I'm going to end green on this trade. That's the way I do it. So if I do get stopped out from oversizing, I usually don't re-enter, because say my entry was, let's say 1.00 is my entry, and then it drops to 0.8 and I sell at 0.8. And the next thing I know, it goes up and now it's at 1.2. The pattern's still holding, but the contract is more expensive than where I bought in the first time. My mindset when that happens, I am never going to buy the same contract for a more expensive price when I sold for a loss. I will never do it. Never in my life will I do that. If I sold a contract that I bought at $1 at 0.8, I'm not going to rebuy that same contract at 1.2, even though the pattern's holding, it's showing buying pressure, it's moving upside. I just sold for a loss, and you want me to buy it back for a more expensive price that I bought it the first time. I won't do it, only because my mental has taught me, like, I can't do this, because I will freak out. If I lose that one, I'm going to think, why did I buy a second time for more than I bought the first time? It's also a wash sale if you do that. Yeah, exactly. It's all about like your personal preference, how you feel. I'm speaking on how I do it, but you can't just listen to me and be like, I'm going to do that, because you're going to mess up a few times. You're going to oversize and not trim. You're going to size too light and then be thinking, oh, I sold for a gain, but I should have sized more the last time. You're going to figure this out as you go through trial and error. You're going to figure it out as you find out what trends work for you historically. If you journal, you'll figure out, oh, well, I'm good off rising wedges when they bounce off the support trend. I'm good off head and shoulder. I'm good off playing just a regular continuation momentum play. Trends are upside all day. You have to figure out what you can actually come to terms with. Win or lose, you're still going to be happy. Some patterns I will not touch, even though I do like them, but I won't touch certain ones. I know historically I have a bad win-to-loss ratio. I know you're setting a predetermined risk, but do you sometimes adjust your stop loss based on how the chart unfolds? So I'll give an example to fit that question better for like my perspective when I say this. Say I'm willing to risk $500, but I size 1,000. So right away, going off that, my risk is 50% loss. If I see the pattern holding and it's just consolidating, it's just sitting, it's not moving up, it's not moving down, I will readjust based off how the chart is holding. Even though I'm down, let's say 40%, but on the chart, I'm still solid to hold. Like, there's no reason to sell yet. Maybe I'll trim half of that $1,000 position, so that way I only have a $500 position left and I already trimmed for a loss. So at that point, I can hold possibly down to 75% loss, and I'll still lose the same amount of that $1,000 position if I sold everything at 50%. So I try and readjust, but I'm not very big on, I set this plan, the chart's holding, I have to readjust. I'm not very big on that, because then if I size heavy moving forward, my mindset will go to, oh, well, last time you readjusted, it worked in your favor. Maybe you should hold longer on this one. The one time that does happen, you're going to get destroyed. Like, I don't want to say like you directly or anyone that's listening, but like from my experience, I've held longer in the past when I shouldn't have. It worked out for me. A few weeks or a month later, I do the same thing. Oh, I was in this position last month. I remember it clearly. I was down 40%. My trim was 50%. It dropped down to 70%, but it came back and I sold for a 50% gain. The one time you try and use that same exact method of confidence in yourself, it's going to not work out. And then you're not only losing money and losing a plan you had set, you're going to lose the confidence. You're going to lose the mental capacity to actually execute next time. You're going to be scared to size as heavy as you may have already. So you're going to size less. And then you're going to get worked up over having to figure out, okay, well, I'm not making so-and-so as much as the week before. Or, okay, I'm sizing less and I'm holding the zero, but my entries aren't as good now. I'm stressing. I'm overthinking everything. I try not to readjust anything after entering unless if I've already sized for zero and say I'm up 10% and it's not going any higher, and I have a TP in mind, I have a level that I want to trim, I'll sell early or I'll sell sooner for a loss if I just don't like it. But I will never hold longer for a loss. If I plan to lose 50% of a position, I'm selling 50%. If I'm in a position and I'm up 10% and I'm thinking like beforehand, well, I want to at least get to this quote unquote price per share on the stock before I sell this contract. If I'm confident that 10% is the highest it will go for my contract, I'll sell right there. And if it goes higher, I don't care. You just have to be content with your results, whether it's a win or lose. If you plan before entering, there's no such thing as a losing trade. A lot of people will bash that. A lot of people will question me when I say that. If you plan a trade and you lose, but you already had that loss planned, it's not a loss. Going off red or green, I get it. It's a loss. You're red on the day. If you planned a setup, if you plan to do this entry and sell at this point for a loss, you followed a plan that you made, that's a success. It's a win. That's how I'm going to end that question. I don't ever readjust. So this person said, let me make sure this is a question before I read it. So that's not a question, so I don't want to read that out loud. So this person said, I have a problem of not taking any trades throughout the day. Then I get in a lotto with 30 minutes or less. I know I shouldn't be taking lottos based on account size, and I end up going in even too heavy as well. Have you experienced this, and how do you cope with the get rich quick mentality? He said today, well, I'm going to answer that question before I keep going. So have you experienced this, and how do you cope with the get rich quick mentality? So I'm going to keep this short and sweet, and people that may have questions after I say this, please type them, and I'm going to continue reading what he said in his statement. The faster you make money trading, the faster you're going to lose it. I'll repeat that one more time. And this goes with life too. The faster you get things in trading or in life, you're going to lose it just as fast. I don't care what it is. I don't care how confident you feel. If you get something quick, you didn't plan for it. You didn't expect yourself to get to that point so quick because you had like a 2-month plan. It just happened overnight. How are you going to keep a result that you didn't go through to get to it? How are you going to keep that? You don't know how you did it. You don't know what you struggled to get to that point. If someone has been training for 4 years and losing every day for 4 years, and they just magically hit 50K gain overnight, like they went all in with their $1,000 account, they make $50,000. You think they're going to keep 50,000 when they couldn't even grow in $1,000 account? They couldn't grow a $5,000 account. They just stumbled upon the most money they've made in one day after losing for 4 years straight. They're going to be thinking, okay, well, if I size 10,000 and do this again, I'm going to have $100,000. Or if I size 25,000 and just sell for a 10% gain, I just made 2,500. No one focuses on that like reward, like I finally did it when it happens so quick because you're so ecstatic. I finally made it. I finally did it. You're going to lose that money. Maybe not as fast as you made it in one day, but you're going to lose it as time goes on. You don't learn from making money with trading. You learn from the losses and readjusting. You learn from all those hard times of not knowing what to do. And now you're finally doing it because every day you have the same pattern. You have the same discipline. Like it's just like last week's discussion we had and the week before that. It's the same schedule. You're waking up at this time. You're prepared for this pattern. You're waiting all day for this setup. You're not going to keep what you make so quick. It's just not possible. And I've been there. It's happened to me a few years ago. So the rest of this question, today I got the 4,100 call for a profit and it was hard to walk away. I wanted to put my daily profits into a lotto, but unfortunately, I had something where I couldn't sit in front of the computer. I know, so he's talking to me directly. I know you trade the afternoon, so you're likely to do end of the day lottos, which is cool for your port, but I know I shouldn't be in them. Thanks. So I think he's mostly, the end of this is more so like him talking about what he did today. But the one thing that I'll say, it's not about the time that you trade. It's not about how much you trade. Can you handle the situation before you enter? The biggest thing I tell people, if you're hesitant, if you're questioning a position before you even enter, are you scared about, oh, if I enter this, if it goes wrong, I don't know if I can live with the results? Why are you even questioning or thinking about entering if you're sitting there, not, I don't want to say shaking, like your hands shaking, heart's beating fast, but it does happen to some people. Why are you still in the trade if you entered and that's happening? Sell wherever it's at. If you know, okay, I can't afford to trade at the end of the day because my account's small, it's too risky, I'm already up $200 on the day. Why would you risk losing money when you already just, like, he just basically told me he knows he shouldn't do it. He knows he was up for his daily profits and he couldn't stay there and walked away, which I think is amazing. Why are you doing it if you know ahead of time, I shouldn't be doing this because my account's not ready, or I'm already up $200. I don't want to risk my money just to try and make more off it. That's that quick mentality, like idea of like, if I put in $100, I'll make 500 right back. You have to realize you can lose that $100 in not even 10 minutes end of the day, 5 minutes end of the day. One candle, you're done. Like, you're done. That's it. And I think a lot of people, it's not about, I don't know if I should do this, or I don't know if I should do this because this is your style and it's not really mine. You're questioning. If you ever question anything, you just shouldn't do it. That's just how I feel with trading. If you're questioning entering, don't do it. If you're questioning, man, should I sell for a loss and just not hope it will come back? Sell the position. No one goes broke selling for a small loss. No one goes broke. Even over the next year, if you sell for a 5% loss in every position, your account is never going to hit zero because it's compound. You're not ever going to hit zero in the account. You may get down to like $50, but you're never going to lose 100% of your account if you trim for a loss early, if you're not confident in what you just entered. What type of accent do you have? Just curious. I'm from the Midwest, bro. Everyone says I got an accent. I don't know what it is. No clue. Michael, chill, bro. When you have a bigger account, you can do 70 to 30 or equivalent strategy. Small accounts should not. So I don't want to say like you have a big account. A lot of people that have big accounts, it's not like they can afford to risk 30%. Like they can't afford, it's not like they can afford to risk 30% of your account because you have a 10K account. It depends on how much they've made over the time of getting to 10K in their account. Like say you had a $1,000 account and you get to 10,000 in a week, you're thinking, okay, I was just sizing $300 on 1,000. I can size 3,000 on 10,000 now. Percent wise and correlation wise, yes, but overall, it's the fact of what's your risk on sizing $3,000. If it's 50%, just focus on the fact that you're losing 1,500, which is 15% of a $10,000 account. Going off the, oh, it's only 15% of my account. Can you lose 1,500 on one trade? That's what you got to focus on. A lot of people, I used to be the same. Oh, you have a $100,000 account. You can size 10,000 and not care. Someone with $10,000, they can't size 10,000 and be like, oh, I don't care. I personally think it's not about small account, medium account, large account. It's based off what you can handle. If you have a $10,000 account and you can afford to size $9,000, $10,000, go ahead. Just realize the risk if it doesn't go in your direction. The fact of if I'm down 10% sizing $10,000, my account overall is down 10% on the day. I'm down 1,000. If you go down 50% on that position, you're down 5K, which is 50% of your account. If you lose 5K on a 10K account, your next play going all in has to be an 100% gainer. Think about that. You just lost 50%, and now to get that back, you have to get 100%. Just let that sink in for a second. I mean, risking profits. If you make 1K of profit, risk 300, keep 700. Yes, that is true. If you're up $1,000 on the day and you risk 300, you still have 700 to end with, but take that into perspective going long term. Say, like, this is all hypothetical. Obviously, it's the same with like with you asking me this. Imagine you have a 1K profit day every day for the week and you risk 300 end of the day and you never win on that trade. Instead of being up 5,000 on the week, now you're only up 3,500. No, you're only up 3,500 because you just lost 1,500, risking 300 out of that 1,000 profit every day. Does that make sense? So like in the moment, it's like, well, I'm up 1,000. I can risk $300. I can risk 30% of my gains on the day. If you do that every day for the week or the month, and say you don't hit like you should, or you don't hit because it's more so like you're throwing $300 and then try and make money back, it's going to catch up to you. And I don't want to say catch up to you, but long term, you're going to realize how much you actually lost trying to make more when you were already up 1,000 on the day. Because I know a lot of people, they'll make $100 and it's like, well, it's only $100. I'll risk 100 to try and make 400 now. Do that for a week straight. You could have been up $500 in the week. Now you're basically break even. Or if you put in $100 of your profit and you lose it, you're going to try and make that $100 back, and you could end up red on the day. That's when the emotions comes in, the uncertainty. Just stuff like that. I don't want to get too deep into that, and I do got to slowly move on as we do this. Next question. So this person just said, how to prevent greed and overconfidence. My worst days have been followed by some of my best days. How to get out of a trading slump, how to recover after a bad week, month, or year. Stop yelling at us. Hey, my bad, homie. Hey, just realize, and I think I say this a lot, I teach how I wish I was taught. I tell people how I wish I was taught when I first started, when I was losing a lot. I'm literally talking to you how I wish Breezy was talked to the first week of trading, the first month, the first year. I mean, dang, man, the first 3-4 years of losing. I'm hoping that like you can take it as yelling, but it's passion, man. Like it really is just the passion. I really want to get into your guys' head that like this stuff is so easy. Trading is so easy. If you can handle yourself, it's so easy. It's all about your mental, who you are as a person, figuring out what makes you freak out. Like you just got to figure out who you are, put that in the trading, and just follow the same rules every day for a year straight and just see what happens. And I'm gonna go back to what this guy said. So greed and overconfidence. He said, my worst days have always been followed by some of my best days. This is something that's happened to me so many times. If you hit, let's just say for a month straight, you had, let's say 25 green trades and 5 red trades. If you journal, if you recap everything you do, you know, okay, well, I've had 25 green trades out of 30. I've only had 5 losses. I'm going to size heavier next month. Are you only going to size heavier and follow the same setups? Follow the same, oh, I'm going to sell at 10% gains. Are you going to follow everything you just did the month before? Or are you only focused on, well, when I was sizing the month before, I was making $100 a day. If I size heavier, I can make $200 a day now, or I can make $300 a day. The one time you don't make that much money and you don't sell for a loss, you're oversized for the first part. And the second thing, you're not going to want to sell right away because you're focused on, well, I was making 100 the last month. I want to make 300 a day this month. You're not focused on a setup. You're not focused on the plan that you may have had the month before. You're focused on, I'm sizing heavier. I can make more or I can lose more. But you're not sticking to the plan of selling early if you have to, or selling for a 10% win, even though you want more money. It's all about the correlation of how percent gains are going to literally correlate and the money's going to follow. If the month before you sized $500 and you would sell 10%, the next month you can size $1,000 and do the same thing. You're just going to make more money. The risk will be more. The reward is going to be more. If you can understand that, you just can't fall off the track that got you successful the month before. Figure out what you did to hit 25 trades out of 30 trades and only having 5 losses. Write that down. And then as you scale up, as you size up, the results are going to be the exact same. The losses of the 5 are going to be slightly more, but the wins are going to be more as well. You just have to stick to that pattern of everything. This person said, does this sound like a good plan? Set take profit at 2,000, stop loss at 900, take 1 trade a day, win or lose, 252 trading days in a year. If I win half of those days for 126 days, I make $250,000. And if I lose the other half, I lose 113,000. I still make 138,000 for the year if I lose half the time. Yeah, obviously following a strategy. Yeah, full technical strategy. Literally, as long as you know what you're doing, you like, I can't just read that and be all like, yes, that's perfect, because you obviously have thought about this. It seems like you typed this out with a plan. You've thought about this before. I don't usually think about, oh, I'm size 2000. I'm going to sell for this much profit. It's more so I'm predetermining if I sell at this point on the chart, I'll make this much. I'm always focused on the chart setup. I don't want to just like segue into what's on the screen, but like the chart forming, I use the chart to figure out, okay, if I size this much, my risk will be this, my reward is going to be this. If the chart hits these levels I'm focused on, support held, I'm entering at this price. If it drops below that support, that's my sell point. Or if it drops below this specific level, that's my sell point. I calculate the contracts with the actual stock chart to figure all that stuff out in one. And let me reread what you said to see if I can answer this better. Because like what you said is that's how it works. The one thing that I'm focused on is like you said, if set take profits at 2,000, I'm gonna take a zero off of each of these. Take profits at $200, stop losses at $90. Right away, your risk to reward is obviously higher with the reward, lower with the risk. The question in hand is how many of those times are you actually gonna hit the take profit compared to the stop loss? Obviously, that's all on results. That's not like, oh, well, what if it happens this many times and not this many times? Hypothetically, you can say whatever and put the plan in a perspective, but the results are going to speak for you after a month of doing this, or 126 days of doing this, or 252 trading days, which is a whole year. So having a plan like this is important, but you have to execute to see if it actually is realistic, if that makes sense. Can you explain how you tend to average into your plays, and usually how many cons will you buy? So I don't want to get into averaging into plays on this topic, if that's fine with you, and I hope you understand that. Since this is more so safe trading, sizing in is never safe. I'll try and keep that question in correlation with this class, but if you size into a play, your risk is going higher. If you sized in for the first position light compared to what you wanted, so say for my first entry, like my full position, I wanted 5 contracts, but I just want to get my hand in the water. I want to test it out first. I'll size 1 contract knowing I have 4 more I can add in, and that can all still go to 0. Sizing 5 contracts is me sizing for 0. That's how I add into positions. So I will figure out, okay, if I get 5 contracts, I can let that all go to 0. I'm going to size in 2 contracts to start though. And if it does go against me, I can add in my other 3 contracts at any time and it won't bother me because I calculated before entering what a 5 contract position would do for me. Does that make sense? I hope. The only time I average down or average into a play is if my initial position was quote unquote 5 contracts, but I only started with 1 or 2. Then it's not really I'm adding into my position or averaging down. I'm more so just finishing off what I planned with 5 contracts total. And I can explain on another class like why I enter or add into plays, why I average down based off charts. I can get into detail on that later once we get into the actual like option contract perspective of this whole class teaching, basically. Because the main focus is to teach like mental journaling, the aspect of risk reward, comprehending what you're willing to risk to make money. Like that's the biggest thing that I'm trying to get to you first before we actually get into how to make money when you enter a contract, or like what's the best premium to enter with having this long of an expo. So I'm trying to get the mental into you guys and have content for mental side before we talk about how to make money, because you can't make money unless you know what you're doing, whether it's entering, exiting, or just the idea of planning before. How do you get out of a trading slump? How do you recover after a bad week, month, or a year? I'm going to keep this one short too, since time's kind of cutting away. I don't consider it a trading slump. Like I was saying earlier, if you enter and sell based off a plan you figured out before even executing a position, it's no such thing as a slump. It's just the charts aren't working out in your favor. I don't want to say ever think back on a trade, but I don't look back years ago and think, man, I remember losing this much money. I don't let that dwell on me. I'll talk about it to teach people that it happens. I'll bring it up to people when they ask, because end of the day, you're going to lose, you're going to win. What are you going to do 5 years from now, though? You can lose today, lose next month, lose next year, lose 2 years from now. But 5 years from now, that third year, you could start winning like crazy. And then that's when the success slowly comes into favor. So I don't try and consider it a trading slump. It's more so I learn what I did wrong if I fell off my plan. I learn how to do better, how to execute more efficiently, how to reduce my emotions moving forward. And as time goes on and you keep correcting your behavior with your entering and exiting or your mindset of emotions, the slump is just going to end and you're going to feel like, well, I didn't even do anything to make this not happen again. That's the whole point of trading. You're not thinking about what do I have to do to be better. It's about what do I have to correct to improve moving forward. You can't just change yourself in a day because you're going to have a mess up a year from now, a week from now. You just have to be consistent. That's all it is. Eventually, the slump's over and you're going to realize, like, wow, I'm doing good and I don't even think I've done anything different. All you're doing is readjusting your losses that have happened and making sure you're on track to have a consistent and disciplined pattern with your trades you executing. You just want to keep that consistency going. How to change your mindset if you have blown a few ports. Keeping this short too, everyone's blown a port. If you haven't, I salute you. Congrats. That's the best way to learn. Like blowing a port is the same thing as failing a test in high school or college. Like you have to lose to figure out like, dang, I gotta try harder. You're not just gonna put in $5,000 in an account and never blow it out. Like you have to lose to learn. So when you blow ports, don't think like, man, I suck. Are you oversizing? Are you have to you are paying rent to be able to use the field. Yeah, Michael, 100% agree. Everything you do, you're paying to learn, you're paying to live, you're paying to do something. You're not just going to come into trading and never lose or always make money long term. You're going to have losses. They're going to hurt you sometimes. They're going to hurt you mentally, maybe even physically. But end of the day, you have to readjust to get out of that trading slump. You have to readjust to not keep blowing these ports. You can't just have a $5,000 account, lose 4,000 of that in a week, and then think on Monday the following, I have $1,000 left. I have to get this back to 5,000. No, you have to readjust. Size 10%, size $100 each position. It's not as much, but your actions got you down to this point where you have to readjust to a small account sizing. You can't risk $1,000 when you just had 5,000 anymore. You have to readjust and slowly build back up. Because if you don't, you're going to blow the port. I mean, end of story. You're not going to win every trade. One oversized trade, you're done. That's it. How to control the FOMO and the anxiety of not trading sometimes. So this is another topic. I love saying this statement. Treat your trading account like your savings or your checking. If you have $5,000 in your savings account, are you just going to go buy random crap? Like, oh, I want to get this shirt. I want to get some new tires on my car. I want to, like, whatever it is, I want to get new appliances for my kitchen. You have money, but do you have to spend it? You have a trading account. Do you have to trade? You don't have to trade every day. You don't have to trade for a whole year. That's how I look at this. If you think you have to trade, if you are in like anxious need of financial help, you need money, end of the day, it's like, why are you trading? If you need money that bad, get a job and make trading your second priority. Don't make trading like, I need to make a trade to make money for my payments. I need to make money for my rent. I need money for this car payment. That should not be your focal point to make money in life, because end of the day, as much as I hate saying this because I'm a big believer that trading is all probability, trading is a risk. End of the day, it's a risk. Not as much as a casino, not as much as gambling. But if you don't have a plan, you're just hoping to make it big. And going back to what I said earlier, if you hit big, you're going to lose that money over time. Just as fast as you make money, you're going to lose it. It's that simple. And if you've never been in that situation, you will find out if you hit big, you're going to lose that money eventually because you have no plan on how to keep that money that you just made out of luck. If you blew a 10K port, what should you go back in with? If you blow any port, you should either paper trade or you should just put in $100 and try and grow that $100 account, or put in $1,000, size $50 and try and grow that account. End of the day, I'm going to say this again, and I'm going to slowly scroll down. A lot of this stuff I may not even touch on with the screen I'm sharing. Say you have $1,000 in your account compared to a $10,000 account. And I'm actually going to type some stuff in. Let's go $1,000. And then you got someone else with $10,000. So look, two people, $1,000 account, $10,000 account. Say each person is buying the same contract at 1.00, which means each contract is $100. Person with $1,000 account, they size one contract. One position. Person with a $10,000 account, they're going to size 10 contracts. Going off percentages, each person is sized 10% of their account. This should make perfect sense because this is basic math. If you don't know this, you should not be trading. You need to know how to calculate percent of your account you're entering. You should know all this off the top of your head. Person with $1,000, they size one contract. Say each of these people sell their positions for a 20% gain. Going off that. Oh, geez, come on. There we go. Going off that, we're going to focus on this whole thing now. I got to separate this because I got ADHD or something. Okay. So we're going off the person that sized one contract. Guess what? They only made 20 bucks. To some people, it's like, damn, that sucks. I don't like that. Person that sized 10 contracts, they just made 200 bucks. So just going off this and going back to what they were just talking about, if you blew a 10K port, what should you go back in with? Going off just logic. You size one contract of a $100 contract, you sell for 20%, you make 20 bucks. Whoop-de-doo. Once you grow this $1,000 account to $10,000, that same exact position that you entered one contract with, you can size heavier now. As time goes on, you will be making $200 a position. Now let's open the perspective just a little bit more. This is a bigger account, obviously. Someone with $100,000, they size 100 contracts. Oh my gosh, 100 contracts. That's crazy. No, it's not. Guess what? That's 10% of their portfolio. Nothing. 10%, nothing. Guess what? They sell this for 20%. They just made $2,000. The exact same way this $1,000 account just made 20 bucks. The exact same way this $10,000 account just made 200 bucks. They just made $2,000 only because they can size heavier with the same risk going off percents. If you can grow a $1,000 account to 10,000, then 10,000 to 100,000, you can start with a $200 account. Yes, your risk will be more if you only buy one contract. If you get one contract, you are sizing 50%. I get that. But end of the day, you have less capital to work with. So you have to realize with less money, if you trade the way you always did with a $10,000 account, you're going to risk more. But if you're able to grow an account that's $200 to $1,000, stick to the same plan. This number is going to be sitting either in your bank account or in your trading account. No exceptions. And if you think, oh, no, it's not possible. If you can turn 200 into 1,000, you can do the exact same thing from 10,000 to 100,000. It's the same system. You're just sizing heavier, quote unquote heavier, but it's the same percent of the account. You're still sizing 10% of the account through all of these three examples right here. $1,000 account, $10,000, 100,000. It's not the fact of, I blew this port, how much should I start with now? What can you risk? A $200 account, obviously sizing one contract, that's 50%. You're sizing 100 bucks out of 200. If you sell this position at 20% of one contract, you just made 20 bucks. Yes, that's nothing. But for a $200 account, you just made 10% of your account. That's 10% of the account growth right there. Say you make 20 bucks on this $1,000 position. You just made 10% account growth on that account. Say you do the same thing with this one. Guess what? That's also 2% growth. Same as the 100,000. That's also 2% growth. Everything correlates with percentages. The money is going to follow. Percentages are always going to be the same. So if you think I blew this port, what should I do? Start small and grow it. If you can turn 200 bucks into 500, guess what? Once you get back to 10,000, it's going to be a piece of cake. Just don't oversize. Like, oh, I have 10,000. I want to size $2,000. Realize the risk if you size $2,000. Be safe. You have to realize this is about being safe and smart. You're not just trying to make money. The money's going to come if you just follow a plan. I promise you. How to control the FOMO of not chasing when other people got in and are making money and you're at break even or red for the day. Biggest thing I can think of, pocket watching is the biggest drug when you're trading. It's going to give you the most ecstatic, oh my gosh, I got to get in because they're making so much money. You don't have to trade just because other people are making money. And I've been through this. I help people currently that are going through this. If someone makes 5,000 in a day, Don't focus on, dang, I have $1,000 account. They just made 5,000. From my perspective, it's okay. Well, how big was their account? How much did they risk? How much were they down on the trade before they made profit on it? Where did they trim at? I'm focused on the stuff no one talks about. If you're looking at it from a perspective of, I don't want to chase this position, they're already in. That's your answer right there. How do you control FOMO? You just don't do it. If someone's already up 10% on a play that they alerted or that they told you about, and you're like, man, I should get in because it looks pretty promising, they're already up 10% from where you haven't even entered yet. They can trim when you enter and they're already done for the day with that trade, and you're just now getting in. That could go to their break even, but now you're red on that trade. I never enter a trade if it's higher than where I wanted it. If it starts to move upside and I wanted to get calls at a lower price, I will never buy into that trade. I'll sit there and just let it go. And people always ask me, like, how are you able to do that though? You never miss a play. There's going to be another play the next day, the next week, the next month. There's no such thing as FOMO in trading unless you yourself just want money. You just want that success to happen so quick. Let it plan out and let it take its time. It's going to feel a lot better and you're going to learn a lot more. Do you use trailing stops? Do you trade on the computer and the phone? Obviously, phone is sketchier, but what's your take? Ooh. So this is going to be obviously personal answer. And a lot of people don't do it like how I do. I'm just accustomed to this. So trailing stops, I will use trailing stops when I already trim and I've secured profit. So let's say I size 10 contracts. I'm not going to put this on the screen. I'm just going to move this down a little bit to the main focal point. So if I'm sized, let's say 5 contracts and I trim 4 of them, I'm not going to say entry, exit. I'm just going to say money amount. So I trimmed these 4 contracts. I have 1 left. I just sold and I locked in, let's say $200. So I'm up 200. This is not including the profit on this last contract I'm still holding. Locked in, I have $200. If this last contract goes to break even and it sells at break even, I still am up $200. What I will focus on, okay, if I let this last contract just go until 0, or if I want to sell for a higher gain, what is the most I will lose if it goes to 0, or how much will I make on the overall trade if it goes to 0? So if that last contract goes to 0, I'm still up, let's say $80 overall on that trade. So I know ahead of time, if I don't put in a stop loss at break even, I'm guaranteed $80. But I just locked in 200. If I put a stop loss at break even, I'm guaranteed $200. If I put a stop loss at $10 profit on that last contract, I'm guaranteed $210. So I don't use trailing stop losses. I more so calculate in my head what I'm complacent with, what I am very, like if it hits where I place it, I'm not upset. Like, oh, it hit and it ran back up. I don't care. If I can lock in $50 on that last contract, I'll put a stop right there. I just locked in $250 guaranteed. I'm all about guaranteed with trading. I don't like the hypotheticals. I don't like the hopium, whatever other terms you guys have. I'm all about just being real with it. I want a guaranteed amount that I know I will get if this hits. How to learn to grow an account slowly, how to learn to be happy with 10 to 15%, how to learn to be happy with your stop loss hits at break even or for a 20 to 30%, and it runs the other way. So that kind of goes off what I was just talking about. I don't want to say it's about like how do I cope with a stop loss hitting at break even and it goes 20, 30% back up or it goes back green. You're placing that stop loss for your emotions in the moment of placing it. Those emotions may change after it gets hit and you get stopped out and then it goes back up 50% or 100%. You are setting that stop loss in the moment when you're up 20% on that last runner or you're up 50% on that last runner. You can't change that feeling after you get out of the position because you made that plan beforehand. You have to stick to it. And if your emotions do go high, like say your stop loss hits, end of the day, you see the contract, it's up 500%. If you're upset about that, don't place a stop loss and accept the fact you can lose that whole contract or you'll come back and magically you'll be up 500% somehow. You are never going to sell the top. Please get that in your head, you guys. You will never sell the top. You may buy the bottom, but every trade you enter goes red at some point. You never enter and it stays green. Right off entry, you're red. If it goes up after that, congrats, you're in the green. But every trade is going to be red when you enter. You're never going to sell the top. You may. There's been times I have. It's so rare though. So don't think you need the best to make money. You just have to be consistent and you have to grow. That's all it is. Those small account gains, you said, how do you learn to be happy with 10 to 15%? Think 10 years down the road. Think 5 years down the road. Think a year down the road. If your account can grow 3% a day for 256 days, you are going to be in shock how much money that is. And I know people that can do 10% account growth, 15% account growth. Kenny is literally doing 8 to 10% a day, simply size and light. So don't think you have to hit 100% gains off a position. Just size and go off the chart. How to learn the trade for the opening and or the close and not be glued to the screen for 8 hours. Some people don't have the time or don't want to be glued all day. So the biggest thing with learning how to trade, like your personality, this is also something we're going to talk about later on, like in the weeks or whatever. You have to realize, me as a trader, I don't trade open. I would rather sleep in and not be in front of my monitor. If I have the choice, I will not be at my monitor early because I know historically I cannot trade open with the reward to risk ratio. I'm always losing money long term when I play open. My bread and butter is after lunch hours, which is 12 o'clock Eastern, 1 o'clock Eastern. I know for me, I can sit in the morning and not trade because I know already if I trade and I lose, I'm going to be pissed because I know I shouldn't be doing this. But I can sit there and not do nothing. That's easy. So you have to figure out for you what times of the day are best. Are you content with trading the first hour of open, making $200 and then just saying like, I'm done for the day. I'm going to walk away. Even if you come back end of the day and you missed a move or the contracts you sold are up 500%, you told yourself, I will only trade open for an hour and I'm done. The results after that do not include you. Don't feel like you missed something because your plan was to leave. That's the end of the day. Whatever happens after that, you can't let that affect you. How to transition. How to learn. No. How to transition from following the mods and their TA to slowly learn and safely take your own plays. So I don't want to speak too much on that because I don't take people's plays. I do my own, like I have my own setup, my own analysis that I do. The biggest thing I will say though, you can't trade indexes or contracts that don't fit your account size. Even if the mods hit rate is high, you don't want to risk that unless if you can risk it, go for it. But you have to realize what you're putting out there and what you're willing to lose. SPX moves fast. You have to realize if the alert comes in and you don't get to it quick enough, a minute later, the position's already up 20%. You're choosing the chase. This isn't like, how do I follow? You are the one doing it now. I can't tell you what to do because FOMO may kick in. I don't have FOMO no more. I don't have the idea of I have to get in before it's too late. One misplay is not, you just missed out on everything possible. It's one play out of the next however many years that you live or however many years that you keep trading. One day is not going to determine who you are 5 years from now, 10 years from now. It may upset you because it was like, oh, I missed a 20,000% play. They're going to happen, just not as rare. Don't think you missed it and that's the last time ever. Stuff happens rarely, unexpectedly. You just have to be prepared for it. So when you're following a mod's account, like when they enter, figure out if you can afford the size with your account size and realize they can risk more than you if they're playing certain things. They know the way a stock moves that you don't know. They can afford to lose a whole position and you may not be able to. If you size 300 a contract and your original size is $100, you can't afford to hold longer than they do. So you may have to trim before they say, hey, I'm trimming here for a loss, or hey, I'm trimming a few contracts for a 20% gain here. You may have to sell your whole position for a 20% gain because you're already sized too heavy. You can't afford to hold much longer. What happens if you swing and the trade opens up 50% down and it opens up down 50% or more? Are you still day trading that day and cutting are you still day trading that day or cutting losses and resetting to come back another day? So first thing I'll say, which I kind of talked about this, I size to lose everything. So if I'm down 50% off a swing, I'm still up 50% of what I want to lose. Hopefully that makes sense. It sounds horrible, but if you size to lose everything, you're down 50%. If you sold right there, you just made half of what you're expecting to lose. Well, you kept half of what you're expecting to lose. That's how I look at it. So if you're oversized, yes, you're going to have to sell for a loss. That's when it comes to your personal trait as a human. Can you trade and not focus on, I have to make back what I lost? You are trading setups. You're not trading to make money back. If the setup aligns that you are good with, enter the trade, size light, size heavy, do what you do, like do what you want to do, but have it figured out. Don't think, oh, this is my setup. It's worked every time. The past week, I'm going to size heavy because it's going to work again. It may not work, and you're going to be down more than just that trade you cut for a 50% loss. Can you size small day trade and swing size bigger, longer dated contracts? So this is all personal opinion for people. The way I look at it, if you're playing a month out expo, like you have a month until the contract expires, contracts are going to be more expensive, obviously. So you can size more because the contracts will move slower. That's how I do it. If you're playing the same week expo or zero DTE, the contract expires the day of, you may not be able to size as heavy because one bad rejection against what you are hoping for, you could be losing 70%, 80% the first hour that you enter, the first 4 hours you enter. So when I play swings that are longer away, you're already paying more per contract. So you don't want to oversize based off quote unquote, I'm going to grab 10 contracts because this is a month out expiration. If your original sizing for a day trade is $500 and these contracts you're trying to swing that are a month away or $250 each, you should only size 2 contracts because you're matching the exact same sizing position you would for a day trade. Just because they move slower, it shouldn't really make you want to size heavier and hope that you hit big. Because the one time you do enter heavy, I promise you, you may get destroyed without even realizing it. And it happens. Don't think if you lose big, it's all on you. You're the only person. Everyone's lost big. Amen to that, bro. I literally sized my confidence in the play that comes to me. I size heavier on confidence. That's what I've noticed about my trading, especially today. But overall, I size light still because we can always retake plays if our convictions hold true. That is 100%. That is 100%. Literally, if you see you, Michael. Literally, if you have a higher confidence based off a setup, you can size heavy, but the only thing you have to resonate with your mindset, I'm sizing heavier, which means I can make more or I can lose more. End of story. Confidence is key. And if you have confidence, even if it's like, oh, I've never executed on a setup like this, but I know I should, size 1% of your account. Size 1 contract when your regular position is 5 contracts. Size light just to build that confidence of executing. It doesn't matter if you win or lose, just focus on executing to get that confidence boost going. How to understand mentality. If you are following a play from a mod blindly, you have to accept the risk of going to zero and need to understand that taking profits is your responsibility. He said, I put this in all caps for emphasis. I think many people struggle with this. How to process mentally that if you grow your account 1 to 5% on average at the end of the year, you will have a 1000% banger portfolio. 100%. Stand in the void, 100%. And I've seen your journal entries, profit and losses. Keep doing what you're doing because it's going to pay off. And soon people are going to be asking you what you did. All you got to do is tell them, hey, look at this. Here's the last year of me doing journal entries because journals pay off, whether it's writing about emotions, the trades you took, the setups that happened, figuring out what helps you as a person. Journaling is the best thing you can do. I promise. And I'm going to answer that question. He said, how to understand mentally if you are following a play from a mob blindly, you have to accept the risk of going to zero. It's not a question, but a statement he's saying, and I definitely agree. If you're following someone's entries, you should never just think I look up to them. They're amazing. They've had a huge hit rate this week. It's going to be green. There's times that it will not go green or you're going to sell early and they keep holding. It happens. Don't think just because you're following a master, which that's how I look at a lot of people. Don't go heavy because of that. Oh, I missed their first 3 signals that went green. This 4th one, I have to size heavy because I missed the first 3 that went 100%. The one time you size heavy, it's not going to work out. So don't ever let I don't want to say FOMO, but the adrenaline rush of, man, I've missed the last 3. Don't let that mindset get into your head. Size light if you've missed the first 3 because that next one may not be green. And I dealt with that this week with sizing. I had a regular position size I wanted, missed the first entry, 2nd, 3rd, 4th, 5th. The 6th time I entered, the trade was invalid. The trend stopped holding. Every 5 times that I missed it, it went exactly how I wanted. It boosted up almost 80 to 100% on the contract. Next time I entered, it went straight down. So you always have to realize, okay, I've missed it this many times. What are the chances this can happen again? What are the chances this next trade is going to be green? I've had 10 losses. I've had 10 wins in a row. Could this next trade be my 11th green? Just size the way you always do. Don't oversize based on your historical hit rate. Just play it smart and let the account grow. Do you set hard stop loss when you enter or play the chart? I know it's been expressed to play the chart, but if you have a small account, the chart levels may be too wide. Thanks. So if you have a small account and you're already focused on, I don't know if I should hold this and my stop loss may be too wide, you may want to try and play cheaper contracts that correlate with your small account. You never want to oversize because that's not a secret to safe trading. The secret to safe trading, you want to size to your account. You want to size to your emotions. You want to size to who you are as a person so that you don't freak out off of a quick instinct of, I don't know what to do. Now you're scrambling to figure out, should I sell here? Should I size down to lower my average? You never want to play something that doesn't correlate with your account size. That's one of the biggest things I can say about a stop loss. If you have a huge stop loss at 10% loss, you may be sized too heavy and you don't have a big enough gap for the trade to actually work out. So maybe size less or find cheaper contracts where you can buy one contract and put a stop loss at, say, 80% loss or 70% loss. For me, I just size for 0 and I let the trade work out. How to decrease the mental anxiety of taking a trade after a big loss. How to really understand that probabilistically each trade outcome is independent. So anxiety is a big trading thing that I deal with. Even to this day, I still have anxiety. I still have historical, like, not like, man, I lost big with this setup. I don't know if I should enter it. If I ever get scared, if I'm hesitant to enter a trade, I'll just take a step back and think, okay, am I sizing too heavy? Is my position I want to enter with, why is it making me scared? I won't enter and then figure it out. I will literally let the chart keep doing its thing, whether it's consolidating, whether I want to get calls and it starts to move upside with green candles, I don't care. Why was I feeling scared? Why was my anxiety peaking? Why was I worried to enter, even though I lost the day before pretty bad? It's all about like comprehending where your mindset is in the moment before entering. You want to figure all that stuff out. So it's not always about, I had a big loss the day before, I can't enter this trade. Well, why can't you? Are you sized too heavy again? Are you just scared you're going to lose? At that point, I tell people, size one contract. Say your original size is 5. Only size in one just to build that confidence back. Because size in one contract, if you're able to hold 5 contracts to a minus 50%, that one contract going to 0 is not going to be that big of an issue for you. You just want to get the confidence back. You want to start to execute. That's all that matters. And if you guys have any questions, type them in the chat right now. But I'm just going to go over journaling for a little bit because this is one of the biggest secrets to safe trading, which a lot of people hate writing. They hate reviewing themselves. They hate breaking themselves down to grow as a person or as a trader. Journaling is literally the only piece of the puzzle that you need if you want to grow long term. Because a trade you took a month ago, all you know is the price you entered, the price you sold for a win or a loss, and the money you made or lost. You may not remember the emotions you had. You may not remember the chart setup. You may not remember why you even took the trade. You may not even remember the zone as to why you entered. Journaling tracks everything. Whether you handwrite, you type it on your phone, whether you use a platform that types this all in for you, then you just write your like your thoughts in the index below, whatever it is. Journaling is literally the foundation to have safe trading moving forward because you have everything on your hands. The trade from last week you had, your best trade ever, you document. I felt this good about it. The major thing, emotions before you enter the trade. If you've had 20 trades back to back where you enter, like even before entering, you're calm, you're happy about this. You're like, whether win or lose, I'm happy. Write that down. Figure out how much you size for that position. Figure out what pattern it was that you played. Keep track of all this stuff. Did you follow a plan you are familiar with? Before the trade, was it a pattern you liked? Did you set up, 50% loss, I have to cut? Did you follow that? Did you not follow it? Did you sell it 30% because the stock was looking iffy? You didn't want to risk that extra 20% drop. Did you enter a play off FOMO? You can win a trade and it's good, but you can't win a trade off FOMO and expect to win every single time you do that. You can't chase and just expect to win. You can't chase a drop for puts and expect to win every time. Did you oversize and it caused you to sell sooner than expected when you're red? A lot of people will size heavy because they want quick money, not realizing they're going to sell down 20% just for the stock to peak at 40% loss and then it comes back, you missed on a 50% gain. A lot of people oversizing is the biggest issue, and I'm one of the biggest advocates to speak on that. Oversizing will destroy you. It will literally destroy you. Do you trade with bigger size and confidence when there is positive news for a stock or a job report? So I never trade news releases. I never trade earnings. I never trade a stock that has news about, oh, the price was raised to this much per share on the stock. I never trade that stuff, only because it invalidates all technical analysis. It invalidates all zones on a chart. Volumes not consistent. Volume starts to be fluctuated in and out based off news. I like to play setups and not go off reports or news or anything like that, because it keeps my sanity calm, and nothing outside of what I can control is going to make my trade go against me. If the trade doesn't go right, it's because the setup that I saw did not work out. I can't blame anyone but myself at that point. Also, from experience, don't go play a ticker you're not familiar with that someone hypes. We've done the research, but if you haven't, you will not know when to enter or exit, and you'll be clapped. So yeah, the biggest thing I tell people, trade 2 to 3 stocks. Trade the same stock every day. It's boring, but you will be so shocked at how easy it is to trade the same stock every day, the same 5 stocks every day. It becomes like you looking in the mirror at yourself. You just know what to look for. You know what's normal. You know what's not normal. The more stocks you watch every day, the more cluttered you're going to be, the more enticed you'll be to chase a stock that's up 5% on the day compared to a stock that's down 4% on the day. Focus on like 1 to 3 stocks, 1 to 3 indexes. Don't focus on anything else for a few months, and just watch how familiar you get with the volume that comes in, the way it moves off patterns. You will see stuff repeat. And if you catch the repeats and you follow your journal entries, you will literally catch stuff you never thought you'd catch. I mean, Netflix has the same setup every few months, and I just wait. I wait. When it hits my zones, I enter with time. I wait again. I wait again. I'm always tracking. I'm not forced to move to, I'm not going to go watch GameStop stock because Netflix isn't looking good today. I'm just not going to trade today. I mean, it's that simple. If you don't have something to quote unquote distract you, don't find something to distract you. Literally just wait. There's no rush in anything. Like even with life, if you don't have something around you that's entertaining, don't try and find something to replace that void. You just wait for whatever you're not having right now. Don't try and fill a void that you don't know about. That's going to change you as a person, change you as a trader. Just be patient with everything. I've watched 10 tickers at a time. It drove me nuts. I used to trade with 8 charts on my screen, 8 charts on this monitor, 8 charts on this monitor. I didn't even know how to enter. I would just look like, dang, this one looks good. Oh, wait, but this one's going up and this one, like you just get distracted. How's Netflix chart looking next week ahead of earnings? How's technical chart looking for next week? Bullish. RC, if you are free Sunday night, I'm going to be doing a chart review of this upcoming week while also reviewing this past week of stuff that we charted this previous Sunday. And if you're not free, it's going to be recorded, but I will be sure to post my Netflix chart either tomorrow or Saturday for you to look at if that works out. The only thing I see on that, I mean, just going off my memory, going off the daily for Netflix, we're approaching a solid support. We rejected the rising wedge resistance trend, so we came back down on the daily. Smaller frames, I'm not too sure, but a lot of stuff has already ran into earnings. We also have CPI on Wednesday. I think we have FOMC minutes, or not minutes, but the FOMC on Wednesday. It's going to be a rough week, and there's a lot of earnings. So was this run up real? Everything was low volume. Is it going to hold? I don't know. I have no idea. But overall, Netflix is kind of just chilling, I want to say, not doing too much. Does anyone have any questions, concerns, statements they want to make real quick? Would you recommend just observing charts and options in real time versus paper trading? I know some people have said it is not comparable due to the emotion involved. So I paper traded. You don't feel the same emotion as real money, obviously. You just said that. But if you follow a plan with paper trade, like I'm talking, you're down 30% and you said you would sell at 30%. The main thing people say, well, it's not real money. I'm just going to keep holding. Let's see what happens. You can't do that. If you paper trade, you can be effective with it to build a confidence and build a mindset with transferring the real money. But the main thing I will say, if you don't focus on a plan with paper trading, there is no way you're going to focus on a real plan with real money. Because the one time you don't follow real money, or even the one time you enter a real trade, your emotions are going to flare up. It's so weird how paper trading and real trading, it seems the same to a new person, but when you really get into it, it's not anywhere near the same from a mental perspective. Like you will feel emotions you've never thought, even though, oh, I paper traded for a whole month and I felt fine. The first time I did real money, I was so scared. It's just there's a huge difference if you don't follow a pattern with paper trading. And even following a pattern will not prepare you for real money. That is one thing I can also say. Do you feel the stocks are overbought or more continue upside? What's the chart level for SPY, QQ, rejection, reversal? So just because that's not about this Thursday night class, I don't want to speak on that, but I'll briefly explain how I feel. I think we've been pushing a lot off low volume. Continuation still going to keep going until we have a major reject off heavy selling pressure. So as of now, I am not too sure what is going to happen. I wish I could predict the future because we'd all be rich, but you just got to wait for the chart to form, have low risk, high reward, and just trade safe. Wait for something to form that puts you in a position, probability wise, to not lose a lot of money. I'm trying to tie everything back to safe trading right now because we're over about 16 minutes, but I don't mind talking for a little bit longer. I know someone out there has something. There's something that bothered them today, something this week they missed, selling too early for it to keep running. Let me hear something. Amazon, SPY, Netflix, all you need. Coco, that's been our bread and butter for like 2 years, bro. Amazon and Netflix. Outside of that, S&P. That's all I do. I miss Google, Microsoft today. How did you feel about missing Google and Microsoft? I saw Microsoft bounce like 9 points on a 0 DTE day. Contracts probably went like 1,000+%. So I get that. The way I look at it, you didn't miss it. You just weren't prepared. Don't think you missed anything. Just prepare for the next one. You don't know when it's going to happen. That's why you have to prepare. Every day you show up, you wait. If it doesn't happen, you show up the next day. If it doesn't happen that day, you show up the next day. I was focused SPY and SPS didn't move much. Yeah, overall indexes were iffy. Stocks within them were moving big though. I know Apple bounced off my main support on the 4 hour, went from like 161 to 164. I missed a lot of stuff too. I didn't prepare for a lot of stuff. Don't worry. I technically missed it because I had that charted, but I didn't have it pulled up. Anyone have any more questions? Thank you. Have a good night. Enjoy your weekend. Thanks for all the gems. Definitely getting back to journaling to create more consistency in my trading. I definitely needed this after blowing account this week and sat on my hands and just watched. You are all very welcome. Yeah, I'll see you. I'll see you Sunday. Charting Sunday should be. We have to prepare this week or this upcoming. Should be a good week. But I appreciate you guys. I'm gonna stop the recording for now.